Let me now welcome on board Mr. S Chakravarti, MD and CEO at Shriram Finance, joining in the show right now to talk about how their quarter has been. Thank you so much, sir, for taking the time out and speaking with us today. I want to first, Mr. Chakravarti, talk about how great a quarter it's been for you. As we can see, the numbers have been largely in line. Help us understand what's aided the growth for you and whether or not this is sustainable going forward despite a higher base that you're now working with.
Morning. Thank you for having me here. So as far as sustainability is concerned, I think, yes, we are in line. Probably we are in line with the guidance, and probably we will slightly overshoot the guidance also, looking at the way the first quarter has performed. In fact, if you look at our initial guidance, we were conservative in our guidance initially, but fearing that there would be a slowdown because of elections and other issues. But fortunately, the business was not affected much. And I think going forward, next 2 quarters should be good.
Exactly, because your NIMs also have seen a little bit of a dip. Although last quarter when we chatted with you, you were quite confident of maintaining 9%. Next quarter, would you say that you would be back on track and this quarter was a one-off because of elections, etc.?
No, I don't see. It's basically a change in product mix. I think that was the main reason for a slight drop in the NIMs. It's also because first quarter we did a lot. There was a lot more demand from our customers for newer vehicles, so which means the yields would be lower on those in that segment. So a change in that slight product mix has resulted in it. But I think. Yeah, we should be around 8.8, 8.9% going forward.
RBI in a sense is working towards liquidity measures which are not favorable for NBFCs. NBFCs are finding it difficult to borrow. NBFCs are finding it difficult to borrow at the same cost. How will that impact you?
Yeah, RBI has been actually asking us to rely less on bank borrowings and move more into the market borrowing side, which as an NBFC we have been for a quite long time. I mean, banks were not our major funders, though we have about 20% of our funding coming from banks. But unfortunately, for those NBFCs who do not have access to, say, borrowings, overseas borrowings, or fixed deposit, yes, they're finding it a little tough to, gather funds, and as a consequence, it has also become slightly expensive for those. So unless the domestic bond market deepens and probably the regulators allow your insurance companies and pension funds to invest in at least a AA rated companies, I think we will see some more of this for smaller NBFCs, this tightness to continue.
Okay, tightness might continue, waiting for that deepening of the bond market. But I want to just put the spotlight specifically on two segments of your business. One is gold. While YOY growth has been strong at 23%, quarter on quarter it has been a decline. This despite the challenges that other peers are facing in the sector. So it perhaps is a good time for you to increase the market share. What caused the dip in the gold loans? And secondly, MSME has seen a very sharp growth of 44%. And even in the budget, we heard a lot of commentary coming in on push towards the funding for MSMEs. What kind of growth rate do you envisage for both MSMEs and gold?
See, gold, actually, we are committed to increase our portfolio. So we are actually expanding our reach in our existing commercial vehicle branches. So the dip is temporary because we were actually revamping our entire, wherever we have legacy gold loan branches, we are revamping the infrastructure in the branches. So there was a slight disruption in the business, but I think coming quarters, it will be back to normal. As far as MSME is concerned, we have always been a company that is focused on small businessmen. So budget or no budget, we will continue to focus on this sector, and we see immense potential in this sector. Uh, I, I personally feel, I feel very strongly that this sector should be supported, and there is still a lot of gap in the credit availability for these small businessmen. And I see a sustained growth at these levels for MSME, at least for the next 3-4 years for Shriram Finance.
Do monsoons have a role to play in your business? It's raining, it's pouring, good monsoons. How will that change things for you in the second half?
That should actually give us a good demand for tractors. And of course, monsoons are always good for rural economy, where around 60% of our AUM is from rural economy. So it's always a good news for us.
Okay. In the light of what is happening to the entire auto space, where the base effect has kicked in and replacement market is picking up, how does that change life for Shriram Transport? Because I was looking at the recent numbers. The recent numbers are showing signs of a base effect now.
See, if you divide this into HCV, heavy vehicles and light commercial vehicles, yeah, the light commercial vehicles have seen a slight decline in sales, but demand for heavy commercial vehicles has gone up. Probably also because of the demand from the infrastructure sector. And we are also seeing replacement demand coming from our existing customers. Though in the last 3-4 years, the replacement cycles have gotten longer, we are seeing the green shoots of the demand coming up. In fact, as I said, the first quarter, some of our NIMs were slightly lower because we had funded more of newer vehicles in the first quarter, which is again a good sign for our used market also. We hope in the next 2 years, the replacement market will grow. As a consequence, the used vehicles availability in the market also will be strong. So right now, it's slightly in the used market, availability of vehicles is still slightly down. So next 2 years, it should go up. So overall, I feel in the next 2-3 years, the sector should do well, the transportation sector.
The sector will do well. Quickly, just wanted a take from you with respect to the credit costs as well, because while rest of the peers are reporting some pressure there, you managed to do pretty much okay. What's the guidance with respect to credit costs? And you are also maintaining the fact that you're expecting bottom line growth to be faster than top line. What kind of growth are you envisaging there?
See, right now, I don't want to put a number to it, but definitely, as I said, we will beat the guidance, number one. Number two, credit cost, it will be around 2%. We are sure of that. And the first quarter actually panned out really well, and we hope to continue the same momentum.
What are you doing to bring your credit cost down? I mean, 2% is good, but it can be better.
It can be better, no doubt about it. But then you also need to understand that majority of my portfolio is from rural area, and also most of it is used vehicles. And also my MSME of 28,000 crores is majority of it again is from small businessmen. So any disruption in their business, even for a week, 10 days, they may miss a EMI. So we are okay with this 2%. So let me put it this way: the NIMs are, as long as my ROA and ROE are able to handle this cost, and also my NIMs, I'm able to hold on to my NIMs. I think we shouldn't worry too much about a 2% credit cost.
Mr. Chakravarti, great to have you today on ET Now. Thank you so much for taking the time out and speaking with us.
Thank you.
If you like this video, then like, share and subscribe to ET Now.